Hey guys, welcome to a special Inversio Teach. We're here with Syilvaine Laberge from 1844. Sylvaine's going to run us through the current state of the market of strategic and energetic metals. Am I saying it right, Syilvaine?
Yeah, you got it pretty close.
Okay. Well, Syilvaine, take it away.
So thanks for inviting the dinosaur. So I'm going to take you into a long step of history to get to the future and what's going to happen into the strategic and energetic metals. I'm going to do at the same time a comparative evolution of the last 20 years. So let's start. So just a reminder, because a lot of people hear a lot about bubbles, and we had the cannabis bubble, we had the dot-com bubble in the early 2000s. So just to give you an idea, bubbles didn't come over in the last 20 years. They've been existing over the ages. I dug out a few of the most interesting ones. So in 1637, there was what they called the Tulip bubble. The Tulip bubble was created by, it was a crisis in the tulip bulbs. And what happened is that at a certain point, it got so exciting that they were selling bulbs at 3,000 times what they were worth. And it was the average of 10 times an annual salary. So it was crazy, incredible. Then in 1720, we have the Mississippi bubble, where the French government issued some shares of the Mississippi stock. And it was created in 1719, and then it was sold to accredited investors for £500. In 1720, the same shares were £15,000. In 1720, they were back at £500, and in 1721, they went for bankruptcy protection.
Wow! So
you can see that bubbles have been existing for a very, very long time. So it's the same thing in 1873 to 1896. There was the railroad bubble where there was a lot of companies and a lot of speculation on all the trains that were in construction in the States and in Europe. It created a deflation in the banking system in 1873. Then we had the Great Depression in 1929 that we heard, especially my generation, we heard a lot about it. It was called, they were loaning stocks, were to purchase stock. So at a certain point, the credit pulled out, and Dow Jones lost 22% in one day. And we know the whole story. On October 24th, the decline went on from 1930 to 1932. So it's been there. It's still like in the process right now with all the bubbles that we saw. There was the Japanese bubble in 1986 to 1990, the real estate bubble where an interest rate went to 10% in the 90s. From 98 to 99, there was the Y2K, because everybody was scared of the 2000, and they were investing in all kinds of company, fiber optics, connections, and there was a lot of speculation and a lot of companies that were, I wouldn't say fraudulent, but kind of shady.
Pretty close to it.
Then in 2007, 2008, we had the subprime crisis, which...
The famous mortgage bond.
Yeah, the mortgage bond, that a lot of people lost money. In 2002, after Y2K, post 9/11, the decline of the tech bubble, the decline of dot-coms, speculation started to go down. A lot of investors were demolished by the market on dot-coms because there was a lot of phony companies. Then we had the consolidation of the new technology. Amazon, Microsoft, Cisco, name it all. They started acquiring smaller companies side to side and trying to build to what we see today. And there was too at the same time the decline of the biotech bubble in 2002, 2004.
Okay.
So it brings us to the topic of this segment. In 2002, I'll give you an idea. Quebec was ranked second for mining potential behind Chile. If you look at the prices of gold at those times, $400 US for an ounce of gold. Copper was at $1 a pound US. Nickel was at $4, and cobalt was at $20 a pound. During those years, we saw that there was creation of new companies. Cisco was created in the surroundings of 2002, 2003. Then Goldcorp, who now is Newmont, Goldcorp was entering into a very, very good phase. Centaur Gold, the same thing. And then we had the Diavik-Ekati diamond mines that were entering in production. So it created a little bit of a buzz around it. So it was the beginning of the mining cycle, to my point of view. So in 2012, all of the mining peaked. So you can see that the mining cycle lasted about 10 years. We talked about the bubbles in the past. Between the bubbles, there has always been a peak or a cycle in the mining sector due to different reasons, construction, industrial, name it. There was always a cycle of mining between all those bubbles. There's always an excitement for something, and all of a sudden people turn around and they go back to the fundamentals, and fundamentals is metals. It's has been since the world has been created, I guess. If you go back in history, they were exchanging silver for gold for wheat, and so it was always part of the human cycles to go into those sectors. So in 2012, most of the stocks had peaked. If we look at gold, it peaked over $1,800 somewhere around 2011, 2010. Then copper hit $460 a pound, nickel at $13 a pound. In 2008, it peaked at $23. Cobalt, same thing. It peaked in 2008 at $115.
Wow.
So we can see that the cycle is about 10 years. And that was usually the cycles that we can see back in the 90s, back in the 80s. The cycle will last about 8 to 10 years at a peak between, I would say, 6 to 8 years. There's always a peak, and then it starts going sideways and it goes down. So that's mostly what the mining cycle is. We can go to 2012 to 2022. We had those bubbles. If we go back at cryptocurrency, Bitcoin was created in 2009. It was a limited distribution at 50 cents and went up at $70,000 in 2021.
So that's a bubble.
That's more than a bubble. That's a burst.
Okay.
So if you look at Ethereum, same thing. 2017 was the creation at 1722, and it hit $5,000 in 2022. There was a massive speculation in crypto between 2016 2022. We looked at the markets. We can see that there was a lot of people going out and saying that they were creating a new cryptocurrency, and most of the new investors lost a lot of money in those because they were all dreaming that they were entering into a new cryptocurrency at 50 cents and that it would go to $70,000 like Bitcoin did.
Typical of a bubble. Everyone wants to jump in.
That's right. So then at the same time, we had the cannabis. Cannabis was it was a bubble, especially pre-legislation, because everybody got excited because there was companies that were building up prior to the legalization of the cannabis, and they were hyped pretty big. There was a lot of speculators out there, a lot of people going around and trying to sell new plants, and they were saying that they were all approved and they had all the permits. And a lot of those companies were created, but there was a lot that didn't survive.
A lot of them disappeared, of course.
They totally disappeared. So the good ones stayed: Aurora, Weed, Tulip, Canopy Growth. There's those companies. To me, they were there at the beginning. They consolidated the market. They bought some other companies. A lot of them don't make their numbers right now. And there was a lot of overselling in pot stocks, like I mentioned before, that weren't really credible companies. There was a multiple disastrous in the buying sector. A lot of people were buying about anything called cannabis, oil, food, whatever they had. So the revenues and profits, that's the other thing, they're not there. So a lot of those companies are struggling right now. Yeah. So we'll see what the future will show. But to me, it was created, it was a bubble, and it was another one like the cryptocurrency. And that's what happened between 2012 and 2022. So much like cryptocurrency, pot companies have been driven up by same gang of speculators. It was the same people. They were all in the same, pot and trying to raise awareness on their company, raise money, pay themselves salary.
Yeah,
and
the
so
typical.
That typical. So for us, in 2000, in the mining sector, because I'm from the mining sector, I'm a dinosaur. So for us, from 2012 to 2018 was really a dark day. Gold went down to $1,100 US in 2015. Then we got copper that went to $1.96 in 2016. Nickel to $3.51 in 2016. So it was the drought for all the mining sector. A lot of junior companies got through it, and they were able to survive on bits and pieces, and with great projects. The problem that happened is that there was no money to explore. So a lot of those companies kept their assets. They raised the bit of money they could to be able to keep their assets. And then in 2018, there was a little bit more money. 2020, there was a little bit more money. But we're still at the beginning of this what I call super cycle. To my point of view, people have to realize that we will be entering into a super cycle in the mining sector, and that's pretty easy to understand.
How so?
According to the Paris Accord, carbon zero for 2050. If you want my true belief on it, it won't happen.
Why is that?
We have a shortage of copper. We have a shortage of nickel. We have a shortage of cobalt. And like I said before, exploration company were able to raise enough money to keep their properties, not enough money to explore. There was some discoveries. I'm not saying there was none, but there was some discovery, but there's a lack of money out there, especially for the strategic metals. So if you look at the windmills, the solar, first of all, it's going to probably quadruple what the need is today to what the need will be in 2020 and 50. Same thing with the windmill on land, same thing with the windmill on offshore. And all the governments signed together that they have to increase those to be able to come to a cleaner energy. And that's where I'm saying copper and nickel and cobalt are part of the strategic metals that we all need to be able to advance on this carbon zero. Just in the infrastructure, we need a lot of investment. There's going to be 5 million of charging ports required in 2025. So that's 2 years ago from now.
That's soon.
Yeah, and it's going to be that's going to support about 7 million electric vehicles. Then there's going to be a lot of investment into the PEV, the electric vehicles by itself. So you can imagine, and I think people can start seeing it in the market. You're going to a gas station now. On the side, you have two electrical posts to be able to charge your car. If you go to a dealership, just try to buy an electric car today in 2023. If you go back in 2019, it wasn't a problem. 2023, all of a sudden, you have to wait 2 years to get a car.
You're on back order.
You're on back order.
That's it. So we went to the Montreal Car Show, I think in March or February. We were looking at an electric Buick.
Yep.
And the car would only be here in 2024.
Yeah,
so that's more than a year wait.
Yeah, that's reality. And I won't get into all the details of the electric vehicles right now. There's a shortage of equipment or parts to be able to build. So right now, what's the best for every car constructor? Is it better to put more money into your high-end cars where you're making more profits, or to put on hold the lower-end cars and put them on delivery only in 2 years? That's the point.
It's a good point.
It's I'm not saying anything. I'm just suggesting that it might be something, a very big concern.
It might be a strategy that they have.
So if we look at right now, the sales forecast by 2025 will be somewhere around 20 million car a year. By 2030, we're looking at 30 million electric vehicles a year. Governments have all agreed to support and all the required infrastructure. When you look at what's going on right now with the copper and nickel and base metal, structural metal, if we don't make discoveries and put in production mines very fast within the next 4 to 5 years, we're on a decline starting in 2026, 27. So as we're growing up in selling new electric vehicles, we're going down with the reserves. So there's going to be a squeeze somewhere. That's why when we started this presentation, I said, I don't believe in 2050. Because
right.
To make a discovery, to put it in production, you're looking anywhere between 11 to 13 years. So even if a lot of the exploration company, name them out there, even if they go and make a discovery during the winter this year or next summer, by the time they put it in production, we're looking at 11 years. So we're looking at 2030.
So we're missing the deadline.
We're definitely missing that deadline.
Okay.
An example on the copper side, copper reserves have been dwindling. They've been going down the drain. The rise in copper demand has been going up. There's a lot of rumors and a lot of movements that have been going in certain countries, major production countries, where they've been nationalizing the mines. Certain countries have been stopping their export on copper and cobalt. So all these factors are not giving a stable situation to the copper and strategic metal at large. So we need to make new and large discovery in the jurisdiction that are friendly.
Jurisdictions like Quebec.
Yeah, Quebec, Canada, states.
And we need to make those
Europe.
Discoveries.
But we need to make those discoveries. And even if we make the discovery, population has to understand it's not, we're not going into a garden. We cannot make a discovery by planting seeds. We have to go out there. We have to find new areas and know, even if something hasn't been discovered or a property hasn't been worked in the last 30 years, doesn't mean that there's not a potential. The tools have changed. The technology has changed. Just look at what's going on in the in the lithium sector right now. If we would have closed all the sectors that have been discovering lithium in the last year and a half to 2 years, we would be out of the picture. We're making the largest discovery in pegmatite lithium in the world, not in Quebec, not in Canada, in the world. We have a company like Patriot Battery Metal. They got probably the biggest project right now in exploration that can be fast forward, I think, and could go in production. We have another huge project called Nemaska. Everything has been put aside, but Nemaska was like, I would say, 9 to 10 months too early when they came out with their feasibility study. Price of lithium wasn't there. There was a few problems, and then all of a sudden, the hit the fan. So we have a great potential here in Quebec. We have a great potential in Canada in general. Same thing with copper and nickel. There's still areas that haven't been explored. There's still areas, and yes, they're closer to population, but people have to understand. Would you rather see companies buying metals or strategic metals from a mine that is respecting the environment, respecting human resource, than, here in Canada, we buy our products from XZY country where 8 years old are working in the mines, where environment is not a problem, they dump it all. So that's the two situation we have to look at. Do we want to be carbon zero with clean products, or we want to be carbon zero with, shutting our eyes? So that's what we have to look at right now. Yeah, it's not far from my place, but it's going to create jobs. It's going to create a lot of things. The economy is going to go good. It's going to be something great for Canada. We're going to be able to be the leaders. I'm not the only one saying that. We could be the leaders in Quebec and Canada for all strategic metals around the world. And when I say the world, I mean democratic world.
That's good.
Right now, we're looking at a lot of supplies are coming from autocrat, Russia,
Countries.
Yeah. China, places like that. So right now, we could be the leaders in our sector.
And hopefully we will be.
Yeah. So decarbonization, yes, we're going to have to get, oil and gas down. We have to face reality too that we will never stop the oil production. As much as people would like to shut down the oil factory and shut down the oil exploration and oil, companies, if we stop all those companies tomorrow morning, we're in problems, because everything surrounding us has a portion of the oil and gas sector.
That's right.
You buy a T-shirt, there's polyester, it comes from oil. You buy a laptop, the plastic around it comes from oil. So on and so on. I could go on all day. So even in the sector of oil and gas, because it's depleting, so you have to continue discovering new zones. Doesn't mean they're going to put it in production. It means that it will sustain for all the needs that we'll have in the future. Okay. And just the needs. And if I go on the other end, like I was mentioning a little bit prior, if I look on the copper side, we have to double the production of copper within the next 10 years. We have to triple the production of nickel, in the next, I would say about 15 to 20 years. Same thing with cobalt. And what people don't realize is that everybody's excited on lithium right now. But lithium is one metal that goes into a battery.
It's only one piece of the puzzle.
It's one piece of the puzzle. The rest is graphite, nickel, copper, even gold, silver.
Yeah, that's right.
Cobalt. These are all part of a battery. Everybody gets excited, and they all have their Oh, I'm going to invest in lithium because it's the future of batteries. I'm going to invest in phosphate because it's the future of batteries. I'm sorry, but maybe you should look at copper, nickel, cobalt, because that's the future of the batteries. Whatever you do on an electric vehicle, all your harnesses, all the motors, everything will have a copper component. That's the rule. It won't change.
Well, it's because you need much more than just one metal to get
It's
somewhere.
it's copper is the conductor.
Copper is a conductor.
If you have an orchestra and your conductor is not in front of it, it's going to be a disaster.
So I like that. Copper is the conductor.
It is the conductor. To be able to sustain on the copper side, the price of copper has to be over $4.50. Definitely we need to have that price to be able to, make new discoveries, put it in production. You have to make money to be able to be sustainable and to be able to go forward. If you're breaking even in a production, it's like any business. If you're breaking even, you won't be open too long.
That's it.
So now I think, to come back, I think we're entering into that super cycle. And that's what people don't understand. That super cycle will happen because of carbon-free 2050. That, in my book, will be 2100. But it has to occur. I wouldn't be surprised to at least have a 20-year cycle in strategic metal.
Especially if we want to get to reach to all our needs, get to that carbon neutral.
That's right.
That carbon neutral target that they've put. So thank you, Syilvaine. That's good. So in a sense, we've seen all these bubbles, but right now we're entering the right time for what's going to be a super cycle where metals are going to be in demand, and metals such as copper, such as even silver, gold,
And
lithium, graphite, you name it.
yeah.
It's a component. You're going to need it.
And the other thing that people have to understand, as much as it's when you enter into a cycle in mining, you enter too in a bubble. And that's what people have to understand. They have to be very careful, because as much as there was promoters in the cannabis and the Bitcoin sector where they were promoting companies that went nowhere, there's going to be a lot of people out on the street right now once the cycle is started. Once copper hits $4.50 to $5, once nickel hits 10, I would say 15 to $20, there's going to be a revival of companies that all of a sudden they're all involved in all kinds of metals.
So that's why you want to get in early.
You want to get in early, look at the companies, make sure that you're talking to the president, talking to the people around the company. Do your due diligence. And what happens in a bubble is that people or investor, or what we call FOMO, fear of missing out, they get excited, but it's not at the beginning of the cycle. It's always 4 or 5 years down the line.
That's it.
Where you get all excited, and then you get all kinds of companies that will be created. So be a great investor. Be a person that will do his due diligence, that will look at the companies. And yes, it's going to be long. You invest. Don't invest for a day.
No. Especially if you want to get in at the beginning when prices are low, it's a long-term play.
That's right.
Well, thank you, Syilvaine. I appreciate it.
Welcome.
Well, if you made it this far, you must be a real fan. So you better smash that like button, let us know what you think down below. And if you're not subscribed already, do that and turn on that little notification bell so you don't miss a single one of our videos. While you're at it, check out the last one. It was a real good one. And until next time, see ya.